We are going to hear from our sponsors. We want to take a minute to thank our First District Association sponsor, Local IQ, and Quinlivan and Hughes, PA. So First District Association, Local IQ, and Quinlivan and Hughes, PA. And let's take a moment to hear from a couple of our sponsors here.
Farm Right Equipment is a full-service, authorized Bobcat dealer providing customers with sales, service, parts, and rental on all new and used Bobcat equipment. We also offer a wide variety of our equipment from trusted brands including Towmaster trailers, Diamond mowers, Buffalo turbine, felling trailer, Minnesota trailers, Ellis tractor, and more. Browse our showroom for all of our latest and greatest product offerings. Don't forget to shop our huge selection of pre-owned inventory. With over 200 new and used units and a rich variety of trailers and attachments on the lot, there's something here for everyone. Farm Right Equipment provides superior customer service for our valued customers with our professional sales team, highly skilled technicians, and knowledgeable counter staff. It is our goal to make you a customer for life when you first call or walk in the door. Daily Dairy Report. With decades of combined experience in dairy economics, risk management, policy analysis, and dairy production, the Daily Dairy Report staff provides timely insight on the daily dairy markets and trading, as well as an analysis of the government price, production, and supply reports. While summaries of recent market activity are valuable to readers, our goal is to connect the dots by explaining to readers which data points are important and why. An annual subscription to Dairy Daily Report is $115, and it includes dairy reports, price reports, economic reports, trading activity, and more. Get your subscription now at dailydairy.report.com.
Well, as everyone is coming into the breakout room, we want to welcome Jim Sulphur, a regional extension educator with the University of Minnesota. And he is here to answer the question, is there a future for small and mid-sized dairy farmers? As he prepares to share his screen, we'll do kind of one more announcement and we'll go from there. We ask you folks to generally stay muted, but if you do have any questions, Jim is very much accepting questions during his presentation. So we'll give it just one more second to get a few people in, and Jim, I'll re-announce you if that's okay. And then you
Sure.
can explain. Okay. We have a few more people coming in, which is great. And Jim, if we do have any technical difficulty, I do have your screen as well, your PowerPoint as well. Hi, folks. Welcome to the Farming Today Ag Show online conference. We have Jim Sulphur, so please welcome him. He is a regional extension educator with the University of Minnesota, and he is here to answer the question, is there a future for small and mid-sized dairy farmers? Okay, Jim, you take it away.
Yeah, let me share my other screen. I think, let me see what you see when I make this big. So do you see the whole screen on the slide?
We do, we see your whole screen.
Okay, perfect. And I think we've got a reasonably small group here today. So if you feel like interrupting me, go ahead. I won't feel offended at all. Or you can chat questions in the chat box. That's perfectly fine too. So again, my topic here today is there a future for mid and small size farms? I think most of us that are listening, probably that's the majority of the farms we work with. Actually, I have a question about what is, it was Dan Martins that asked me, what is a mid-sized and small farm nowadays? Well, you know, that's a completely moving target. But for this, I kind of tend to think it's a farm where most of the management and probably even most of the labor is provided by the family and / family owners. So really that size can vary a lot. If it's just a husband and wife that are operating a farm, I think that's going to be potentially different than size than if you've got three or four brothers that are together with maybe a dad or maybe their in-laws. So actually, I would consider a fairly large farm. I know 500 cow farms where really there's multiple family members involved. They all work together. For topics of this discussion, I guess I'm considering them kind of maybe more of a mid-sized farm because the family is providing most of the labor. So here's a little bit of my, if I can get this to work, my outline. Whoops. Let's see, resume slideshow. Let's see if all our technology will work here. Resume slideshow doesn't like. There we go. My outline for the day, I'm going to talk about profitability of 50 to 200 cow dairies. How I picked that size is that's really what FinBin allowed me to sort until I get up to 500 cows. And so I'm going to talk about some profitability of that size dairies, what makes them profitable, and then some keys to improving profitability of kind of what I see as I travel to a lot of farms, and then ideas on how these small and mid-sized farms can remain profitable. This is just going way back to 1993, looking at, this is FinBin data again, looking at the average cost of production and then the average milk price received over that period of time. And you can see what's happening. There's some trend lines in there, kind of the gray lines are trend lines. And so you can see, let's see if I can get a laser pointer here. You look at the trend lines here, you can see that they're getting closer together. Back in 1993, our average profit on this, or average margin, was about $4 a hundredweight. If you look now, it's less than $1 a hundredweight, more like 75 cents a hundredweight. And so you can see that margin compression has been happening for, it's nothing new, and you see the variability around that line. But one of the things that's happened is our profit per cow has not dropped as much. That's because our milk per cow has gone up so much. And part of that, we just had to, because these margins have changed so much. So let's look at some of the FinBin data. Now, this is a sort looking at profit, and you can see that there's a wide range in profit between farms, and how a number of these slides will show over the next few slides. Each of these bars is a profit cohort. So this is the least 20% profit farms, so 20 to 40%, and the gray bars are the highest 20% profit farms. So you'll see this in a number of my slides as I go forward. This is median whole net farm income. This is the average net farm income, and this is data from 2015 to 2019. That's the most recent data. The 2020 profit data won't be summarized for about another month or so. But you can see my point of this slide is there's a wide range in profitability, and there are farms in these groups from 50 to 200 cows that are doing reasonably well. You look at, there's the top 20% over this period of time has averaged over $150,000 net farm income. And so when I get asked the question is there a future for mid and small size farms? My response is the good mid and small size farms are doing reasonably well. If you consider $150,000 income, pretty good. And even this next cohort of farms is doing fairly well. Let's look at what is driving some of the profit on those farms. So these farms, really this is operating profit margin. And again, it's from 50 to 200 cows. The other thing I did is I took out organic, because organic really is different, because they work with a different margin structure. So these are all conventional farms that are in here. So if you look at it, basically operating profit margin is how much, for every dollar of income, how much does it cost you to make that dollar? So for example, here's a 20% profit margin. That means that for every dollar of income, it costs that farm 80 cents to get it. And you can see, not surprisingly, the higher profit farms, they produce, for every dollar of income, it costs those farms less to get that dollar of income. This is looking at asset turnover. And basically what asset turnover is total income divided by total assets. And so it's how hard are your assets working for you on your farm. And it doesn't look like a very wide range. You've got your low profit farms about 20% and your high profit farms about 25%. You could argue that's only 5%. But when you start doing the math, if you've got a farm that's worth $1 million, so your total assets are $1 million, and to put that in perspective, in this database, the average assets are about $2 million. So for every $1 million you've got in assets, you generate about another $50,000 in income. And so it really does add up pretty substantially if you've got a lot of assets. But you can see these higher profit farms have a little harder working assets. So for all the assets they've got invested, they generate more income. And again, these are all whole farm. So some of these farms have these are all dairy farms, but some of them have a pretty substantial cropping operations. So let's look at this information. I think this is kind of interesting. And I went all the way back to 1993 and looked at this. And this is basically milk per cow across the profit cohorts. So again, these are the high 20% profit farms and the low 20% profit farms. And if you look at this, particularly if you look at the top 4 cohorts, if you kind of ignore the bottom 20% profit farms, you can see that these numbers have got a lot narrower. I summarized, and when I went back to 1995 to 1997, the average difference between this 20 to 40% least profitable farms up to the most profitable farms was about 2,700 pounds of milk per cow. So pretty substantial. When you look at the 2003 to 2004 data, it was about 2,200 pounds per cow. And now if you do the math on this, it's about 900 pounds per cow. So it does appear that milk production per se per cow is maybe not as it's not as much of a driver for profit as it's been in the past. And I'm not saying that high production isn't important. Look at the production level on all of these herds right now. That's really what's happened is the low producing herds, either they've gone out of business or they've determined how to become higher producing herds. But profit doesn't appear, or pure milk production doesn't appear to be as important for profit as it maybe has been in the past. And again, I'm not saying high milk production isn't important. If you're out here milking cows, more milk will typically make you a little bit more money, but from a competitive standpoint, it doesn't seem quite as important as maybe in the past. One thing that is pretty consistent is these high profit farms produce higher value milk. So for every pound of milk they sell, they get more money for that milk. And that's always been true as far back as you go. Part of that is probably milk quality. Some of that is components. And so this database really doesn't break that down, but these better farms, higher profit farms, have higher value milk. The other thing they do is they do just a better job of controlling all of their costs. And for lack of time, I don't have time to go into, all of the detailed costs, but when you look at it, the big 3 costs on our dairies are feed costs, net replacement cost, which is really think of it as a trade-in value for a cow. So we cull a cow and bring in a heifer. There's typically a cost for that because it'll cost us more to raise that heifer or purchase that heifer than we'll get for that cow we sold. And so that's kind of what net replacement cost. And then the other one is labor. And so those 3 costs are all lower on the higher profit farms. The other cost that tends to be lower is interest cost. So these, especially at the high profit end. So again, you can look across and where that's fallen over the last couple of years. These high profit farms have become tend to be much more labor efficient. Of course, that drives labor cost and across all sizes. So as I mentioned a few slides ago, has the rules for profit changed? I kind of look back, I'm old enough that I have the opportunity to look back and kind of reflect on what maybe has driven profit in the past. And when I think about the 1960s, that was basically about when I was born, so I don't remember that very well. But it seemed like back then, really hard work won. The farms that just put in a lot of hours and worked really hard, they were able to generate adequate profit for them. In the 1980s or 70s and 80s, there was this big focus on forage quality. We need higher quality forages, and we got a lot of measures for high quality forage. And so those farms that were the first one to adapt high quality forage, milk production shot up. They tended to be much more profitable farms. In the 90s, if you're around, there was a big focus on milk quality. We need to improve milk quality because low milk quality, we didn't get paid as much for it. Cows didn't produce as much milk. We had more associated costs. And I think now everybody pretty much has adopted higher milk quality. In 2000s, there was really a focus on cow comfort and comfortable stalls. That's really when sand bedding came into being vogue and kind of not took over, but mattresses became a part. Before that, we had really thin, small, hard mats. Now almost every barn has mattresses, water beds, sand, something that's much more comfortable for cows. And in 2010's reproduction. I remember when we were talking about average pregnancy rate across the state of a 15%, 13%, 17%. Now every farm has excellent reproduction, and that's one of the reasons we have so many heifers. So these are just my observations or maybe questions. It seems like when I look across the farms that I work with that the farms that are really doing the best or seem to be doing the best really have excellent labor efficiency. And I'm not saying you have to put in technology. Some of that is driven by technology, but I think not necessarily. These farms are just really organized. Their feed centers are laid out really well. Their calf and heifer facilities, it makes it easy to feed the cows. So it's kind of a combination of organization and also some technologies that allow them to really improve labor efficiency. The other thing I think going forward is just more business savvy, so business acumen and really good use of assets. And what I mean by that is they really consciously think about, if I invest in asset A, will that asset make me more money in the future? I'm going to shift gears just a little bit here. This is really one of my favorite books. It is, I read it a lot when I was young. My son would just love this book. So if you haven't read it, I think it's probably in every library that there is. And the title of it is Who Moved My Cheese? And it's really a book about the psychology of how we deal with change. And it's a book about these four little characters. And what really happens, the premise of the story is they're all in a maze. And in this maze, they have cheese. And cheese is kind of a parody for what makes us happy and how we feel. So all of us in our life, we get up every day and we do the same thing. So we've got cheese in this maze. And over time in the maze, the cheese begins to disappear. And initially they don't notice it. There's just a little less cheese, and they say, well, next year there'll be more cheese. It'll be different. But over time, the cheese keeps disappearing, and it's how these four characters react. So you've got two mice, and you can see their description is sniffs out this change early, and then scurries into action. Well, the two humans, they deny the change, and they fear that what will change, it'll be worse than a cheeseless situation, because they notice the cheese every year there's less cheese, but they're afraid that if I change something, it might be worse. And then there's Haw. He learns to adapt in time and sees that change can lead to something better. So I think there's some of these characteristics in all of us, but it's a really good book. And I think some of the morals of the story is having cheese makes us happy. There's certain things in our life that really make us happy and satisfied. But at some point, those things are likely to change just because cheese became less. So I think the moral of the story basically is we have to learn to look for when the cheese begins disappearing and then try to adapt and try to improve the situation at where we're at. But I think it's a really interesting story on that it's really important to deal with change. I think another nice quote that I have is, it's not the strong, this is of course by Charles Darwin, and he's not talking about dairy farming per se, he's talking about species, but I think it's a lot the same. We could think of our business kind of like a species. It's not the strongest of the businesses that survive. nor necessarily the most intelligent. It's the one that's really the most adaptable to change. And I think we can surely think about that in the last year. And all, many of us probably never ordered groceries online until the pandemic hit. And now I think many people have done that, and some companies have adapted just because it's easier for them to do it than others. But I think the companies that have adapted the best are most likely to be the successful ones kind of moving forward. So I just categorized, these are mostly where I see maybe our smaller dairies fitting in, or smalling and mid-sized dairies. You put the number in here. I have no belief that 600 cows is the right number. I just had to pick a number, right? We've kind of got our large scale dairies that have a lot of advantages of scale. I call them kind of the Walmart dairies. They've got a lot of advantages of scale, mostly hired labor, large parlors, run 24 hours a day. As I mentioned really early in my presentation, I'm thinking of these traditional dairies as dairies that they probably have some hired labor. You can see my description of them. Owner and managers, they're all owner managed, and they probably provide most of the labor. They probably, likely, maybe have some off-farm income. A lot of that's really needed for benefits. They raise most of their own forage. They maybe even raise all of their own forage. They maybe do some cash cropping. Most of these farmers are going to compete from an established basis of facilities and equity. So they'll maybe invest in new facilities, but a lot of their facilities are older. They're kind of paid for. They already got a really good asset base, and they have to really think about good asset use. And I would challenge these farms that you're going to really have to think about a strategy to compete in the future. You don't want to try and compete against these very large commodity, I guess you can use whatever term you want, Walmart type dairies, because it's really hard to compete against them, because they really do have some advantages of scale. Because you're going to have to try and expand and keep expanding that margin per cow. And that's, you looked at my early slide, that's hard with margin compression, but these farms are going to have the ability to try and continue to do that. So here's some of the things that I think they've really got to think about. They've got to really be careful about just investing in toys for the sake of saving taxes. Maybe I'll pick on that. But I think they've got to be really careful not to buy things just because they're nice to buy or might be nice to have. They've really got to be conscious about spending. They've got to not overinvest in assets without a good return, because they just don't have the ability and can't generate enough income to do that. They've got to be a little bit careful about owner family withdrawals. At the same time, that can be an advantage if you have a really tight year. They can really scale back on their owner and family withdrawals. And they have to be a little bit careful of a lot of new expensive paint, because they tend to generate the toys and the new expensive paint tend to not generate a lot of return. Some of the things that they really should be investing in, because long term, it's an asset that will make them more money. More cow comfort, more cow cooling, make sure you have high quality feed and high quality feed storage, labor efficiency, owner education, stay up. So again, this is all about really investing in assets that long term will pay dividends for you. We're also going to have a lot of smaller scale farms or mid-sized farms that are going to go into maybe niche adapted facilities. So they found a specialty niche that really can set them apart. And again, on the bottom, what they're really trying to do is expand that margin between income and expenses. And these are just some examples. There's some farms, your land might be real suitable for grazing, so you can really keep your cost of production down by grazing. And that can be an advantage. We're going to have some, they're going to do some on-farm processing. Now, of course, you're starting a whole new enterprise, because that involves marketing your own milk, a lot of that. There's going to be organic is an example of kind of a niche market, although it's becoming a little more commodity based. There's specialty markets. Some farms are going to sell genetics. They're in kind of the registered business. This could be, there could be other, agritourism might be an option. There could be other options that are on here. These are just some examples. So I think every farm really has a strategy, even if they kind of don't know it. I mean, even if you don't consciously have one, you have one. So I encourage these mid and small farms to really make a conscious decision from a business planning standpoint is what is your natural resource or human skill advantage, and really take advantage of that. So are you really good at getting milk out of cows? I mean, I work with some farms that are at 30, the cows are always over 100 pounds of milk a day. Those farms can have a little higher cost because they get so much milk per cow. As I mentioned, agritourism, if you've got the right personality, I think there's a market. People really like that concept. Is there some areas you can partner with a neighbor or share equipment or share some facilities or do something like that? Diversify. There's some farms that have custom cropping business. There's farms that maybe one of the children is a good welder, so you start a little welding shop. Again, look in the mirror and say, what is my advantage? I don't think the local hardware store is trying to compete against Menards. They're saying they know it's different because they can do some margin things different. But my point is, they don't try to compete. They try to think about what's my strategic advantage and how do I capitalize on that? As I mentioned earlier, farms are going to sell genetics. We've got some value add them. Potentially, you could have your heifers custom raised, or you could potentially have custom raised heifers for a larger dairy. The other thing, I think these small and mid-sized farms, and again, we can determine what size that is, but up to 5 million pounds of milk per day, clearly the struggles that the dairy industry has gone through over the last couple of years has really resonated with legislators. And I think we really need to thank Colin Peterson for a lot of this. But if we would have had the 950 benefit for dairy, this is what the indemnity payments would have been. So we all like 2014, but every other year going back to 2010, there would have been some net payment through the current DMC program at 950. So I think that really, I think it really has the opportunity to help some of these farms out. This is just the expected payout for 2021. I accessed this about a week ago. I went in this morning, but their website was down. And so you can see basically how this looks at it. It looks at the forecast feed model. It looks at the coverage level. This is all 950. It puts in a 0 local basis. And it says at what trigger price will you get paid? And I just looked this morning, and the payment for January is $236 per hundredweight. So I think there are some programs out there, government insurance programs that can buoy up or can help you and will protect you at least for the first 5 million pounds. There's other programs out there. I just don't have the time to talk about them. So keys to success, how many of these do you do? Do you have a business plan and a real specific strategy for yourself? And are you trying to execute that strategy? Are you really thinking about capitalizing on your natural resources and human resources advantages? Are you willing to be nimble and adapt to changing times? Do you make strategic investments? Do you use a management team? We're fortunate in Minnesota. We've got a grant program through the Department of Ag that can help with that. Do you keep good records, both production and financial records, and do you do a good job of cost control? And with that, I think it's also really important to keep life in perspective. I know dairy farming it can be tough sometimes, but I think we got to keep life in perspective that oftentimes many of the best things in life are free. Look at the things on this list. Our mind and our health and our soul and our hope and our friends and our family. They're all really don't cost much, and they really can't be taken away from us unless we're trying to compare ourselves to our neighbors. So I think sometimes we need to look inwardly and say, what am I doing? And these are the things that are important to me. Here's my 2 sons. He's actually on staff at the University of Minnesota. This is our 1 cow parlor. We milk cows. And this is my other son, Lucas. He works for Polaris. He's up in Roseau right now. I just talked to him last night. He got his ice fishing off. This is my wonderful daughter, Hannah, who's actually a teacher in a Catholic school, and my wonderful wife, Cindy, in St. Cloud. So I think we need to keep that in perspective also. So with that, that is all I have, Bonnie. I'm sorry. I think I'm maybe a minute or so over.
That's not a problem, Jim. Thank you. Say, we do have a question. And and I'll read it to you. You mentioned labor efficiencies. What can producers do to impact on their farms considering the availability and cost of hired labor?
Oh, so run that by me again. What can they do?
Yeah, what can producers do to impact on their farms who are considering availability and the cost of hired labor? I think maybe that might be a
Yeah.
better way to answer that.
Well, you know, I don't have to tell anybody out here that tried to hire labor that it's expensive and getting more expensive, and it's becoming very, very hard to find. And so I think from a labor moving standpoint, I think we need to be a little creative. I think there are some farms I know that are small farms that have had really good luck hiring labor, quite frankly. There's a lot of people want to work for small farms, but you have to really treat them a little bit like family. I mean, some of these farms, they'll make them lunch, they'll have treats for them. Sometimes they'll even make them a whole meal on several days a week. And I think people like that family environment. I think the other thing, for just from a labor efficiency standpoint, that's just from a hiring labor standpoint, and that's sure not my wheelhouse. That's just my observation as I work with farms. But I do think that just think about strategically investing in technologies that can save your labor. And I do a lot of work on robots, and I'm not standing here telling you you need to have robots. I'm saying even from laying out farms and little things, you know, laying out your heifer facility so you can do drive-by feeding. When you make facility changes to your facility, try to really, whether it's laying out feed centers, whether it's manure, you know, long-term manure storage, think of what that does to just save labor. So just think about the steps people take in a day and how to minimize those steps and make labor as efficient, whether that's your family or whether that's hired labor, really doesn't matter, but really kind of try and think about how can I make labor as efficient as I can on my farm. I'm not sure that answers it, but.
Okay. Well, no, I think that's good. Jim, thank you for presenting today, and thank you everyone for attending, for coming to this session. On your